What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
We just recorded this conversation with Matt Pines from the Bitcoin Policy Institute. And if you're trying to understand what the world might look like in 5 years from now, this is the episode to hear. From strategic deals, huge deals in the Middle East, to the remonetization of gold and Bitcoin, we break down how geopolitical power, money, defense, and energy are being renegotiated. And ultimately, why Bitcoin is increasingly being seen as a tool of U.S. statecraft, not just a store of value. We take a peek behind the curtain at what's happening in D.C., from the strategic Bitcoin reserve to the rise of Bitbonds, to how the U.S. is positioning itself in a global Bitcoin arms race. And Matt absolutely delivered. We really had to barely talk, and you're about to hear why. But before we dive in, ask yourself, is your Bitcoin secure enough for this new era? Maybe you don't want to think about it, but you really should. And so at OnRamp, we work with individuals who take Bitcoin seriously and need a solution to match that. And that's why we focus on multi-institution custody, a model that eliminates single points of failure, includes insurance coverage from Lloyd's of London, and allows your Bitcoin to be passed on to your heirs without them ever needing to manage keys. And all of this can be handled in minutes, not months. So if your Bitcoin strategy spans decades, and then peace of mind is not optional, it's really foundational. So go to onrampbitcoin.com. You can sign up in minutes, or you can book a consultation with myself or even with Cam, that stud on the bottom right side there, and we'll make sure you're taken care of. Now, hope you enjoyed the episode. All right, it's time for the last trade. We broke the streak this week. We've had 5 people on the podcast for week after week. This week it's just 4 of us, so we have Michael, Tanguma, and Brian Cubellis here at OnRamp, and we're joined today by Matt Pines. Matt, you're only one person, but maybe we could say you have the brain of 2 people, so we do have 5 people on the podcast today. Really excited to be recording with you. You're the executive director at Bitcoin Policy Institute. You've been full-time there since when? February of this year?
Yeah.
Nice. So you've been involved with them for a while. I think I caught somewhere in your bio you published the first white paper for them, and then you've been involved for a number of years, I guess 3 years or so. So really excited to get a better grasp on what's happening, in federal policy. But this conversation, I think, will span much more beyond that as well. We'll talk a lot about what's happening with state strategic Bitcoin reserves, Bitbonds, just budget neutral ways to accumulate Bitcoin. Something we've been talking quite a bit about, but I think we'll go into way more detail, and really just appreciative of you being on the show today. Thanks for joining us.
Thanks for having me. Yeah, I've caught a number of your recent episodes, so you guys have some good rips. Thanks for letting me on.
Nice. Well, appreciate that. At least someone's listening. Makes it a little bit more rewarding.
At least one person,
Yeah, that's great. So Matt, why don't we start with what's going on in the Middle East this week? So there's the U.S.-Saudi Investment Forum. You've had some takes online, and maybe before we get into the details of it, could you just kind of share a recap for the audience of what's going on in the Middle East this week? What have you been paying attention to? And then would love to dive into a bit more detail of what the broader implications are, from a policy perspective or economics, geopolitics, etc.
Yes. So just like the facts, 10,000-foot level view. This was Donald Trump's first major overseas visit. Was received by the Kingdom of Saudi Arabia, and he's doing a kind of 4-day tour of the Gulf countries. And the main event that kind of kicked everything off was a U.S.-Saudi investment forum where a number of strategic, both arms as well as technology and diplomatic kind of deals were announced. Kind of a whole bundle of initiatives relating to artificial intelligence, new energy investments, critical infrastructure investments, arms sales, and announcements on kind of a diplomatic reset potentially in the region. So each individually were quite significant. Like as a package, they seem to indicate a strategic shift in how the U.S. government is approaching lots of different policy domains as part of an integrated approach to statecraft, to pursue a different vision of America's role in the global order, right? So that's kind of my interpretation of the facts. And I think it's being motivated by a lot of different separate threads that all kind of come under this sort of rubric of a global reordering, right? That the administration and the senior officials were telegraphing, even before the election, their view of economic policy, of security policy, of technology policy, as needing to go through a decisive phase shift under their leadership, and so that's what they're executing. You could say their implementation of that vision, right, could be improved in various ways, but it's very clear they have an objective here, which is to reorder the sort of terms of the security arrangements, the terms of the trade system, even the monetary system to a certain extent, as well as to use America's strengths to a certain extent, like our technological leadership, our military leadership, and to a certain extent our economic heft around the world, to kind of redemarcate the lines around which kind of America considers its zone of influence, in what you have to sort of accept as a hierarchical system, right? The U.S. views, and lots of great powers throughout history, whether explicit or implicitly, view the global arrangement in a hierarchical fashion, where they're at the core / the top, and there are powers that exist within a certain set of relationships with that power, and there are deals, inducements, and coercion. So what we saw in Saudi is an example of this, where we leverage the fact that we can control the supply chain for frontier AI models and their semiconductor components to essentially grant access to Saudi Arabia to some chips that they had been cut off from under the Biden administration, combined with the fact that the Saudis and other Gulf countries control trillions of dollars of surplus capital. And so the upshot is to bring kind of the Gulf kingdoms into a tech tariff trade and security zone with the United States that helps underwrite this sort of techno-industrial investment strategy that the U.S. is pursuing to secure continued dominance in these frontier technologies, which will require access to large amounts of energy and large amounts of capital, while also sort of boxing out China from potentially doing the same play in the Middle East. China has their own objectives to sort of capture the techno-industrial frontier, and they have certain advantages on the energy side and the kind of the command and capital economy side. And so this is kind of great power technology, great power network competition playing out. We'll see what the counter moves are. But there was a lot kind of baked into that one day of announcements that kind of is a prism by which you can kind of see all these different sort of threads coming together.
Yeah, it's really well said. I think like there's an interesting component of, obviously like on the Bitcoin side, most people are just so busy in their day-to-day lives. It's my reason personal where it's hard for people to understand Bitcoin is because like you're on the rat race. So how can you take off to like just understand, 21 million? Very similar to what you just broke down. Most people have no clue if this is happening because they're just so busy, and obviously like the traditional media is not telling you any of this. Curious, like where would historically we sit if a different administration would have came in, or what was happening before this, right? Because it's obvious that this sounds like this is kind of form fitting for a new administration, geopolitical favor for the U.S. Was like the administration before asleep at the wheel, and were we heading down the wrong tracks on this? I think we all know that there was a lot of things that were asleep on the wheel at, but like what was happening in this respect previously, and what would have happened if it would have been Kamala, president?
Yeah, and you kind of have to pick apart each particular issue. The two, I think, most important issues, or among the more salient right now, are on the AI sort of technology. So the geopoliticization of frontier technology, specifically AI, and our approach to conflicts in the world. I think it's fair to say that the Biden administration and likely the Kamala administration would have continued a policy of kind of escalation, right, in Europe, and likely would not have been able to effectively diffuse conflicts in the Middle East. For a variety of different reasons. I think there is a lot of institutional inertia and a certain contingent of kind of the national security wing of the Biden administration that kind of preferred calibrated conflicts for a wide variety of reasons. Because they felt like ultimately they would get the upper hand, that they'd be able to outlast Russia, that they'd be able to kind of rebalance the Middle East in a fashion that would secure their personal interests. China's a whole separate thing, but there was a policy that was in place to kind of act as if we were still kind of the hyperpower of the 90s. Jake Sullivan, the national security advisor, kind of came up in that era under the tutelage of Clinton and Blinken. And it's like a marathon runner who was like really fast in their 20s and then ages to their 40s, but still thinks they can run, like they used to, and conducts foreign policy in this case like we still were the hyperpower. I think we sort of saw us running into constraints. We weren't all very adaptable. I think we're seeing now it's sort of this uncomfortable recognition that we are constrained in various ways. We still have lots of reservoirs of strength, but we have to be prudent in how we deploy those to secure our interests in what will is a multipolar, at least bipolar system here. I think there's been a begrudging acceptance that China is a peer competitor, and that we can't just sanction them out of these supply chains. We can't just sort of try to isolate them diplomatically because they're the dominant trade partner for most of the countries in the world, and they have their own endogenous technological industrial system, which rivals our own, in fact, exceeds our own in many ways. And I think a lot of the sort of the blob heads in previous years that spanned both parties kind of viewed that this would just be the next. We could sort of take out the same bag of tricks essentially, and I think it's not working. And that's very uncomfortable, right, for the kind of primicists in the national security state that believe that we sort of stand astride the world system, and we can sort of give rules and not take rules. I think the uncomfortable part about Trump is he's a bluffer, he's an exaggerator, but fundamentally, I think if you read between the lines of his speeches, he's recognizing that American power is fundamentally constrained, and that we don't have the political mandate to do the same types of global policing and rule writing for the global order that we used to. And so there's this sort of calibrated restructuring of what sort of Pax Americana means. Like, what is the club and fence for that American system? It doesn't clearly expand to the whole world, right? And we're sort of now trying to find where those lines are, that you want to get into the club. This is what you have to sort of pay to get a ticket to the inside that sort of tech, tariff, and security zone. And so, but to do that, you kind of need to like squash the beef. And so I think Trump's meta strategy for foreign policy is just to kind of get peace deals, right? Maybe on terms that would not be favorable to a lot of people, from the Biden administration, but he seems sort of like peace uber alles. Like, let's just get ceasefires in Ukraine. Let's get, ceasefires in Gaza. Let's get, the Abraham Accords signed. Let's get a deal with Iran. Let's effectively squash the beef with China over Taiwan. And if that means kind of recalibrating policy on Taiwan, away from strategic ambiguity, like that may be in the cards here, right? So if you can imagine this conflict zone around the Eurasian periphery, which is essentially this major dynamic that we've been facing for the past few years, is sort of Eurasian autocratic powers that control the marginal supply of commodities and increasingly like high value added goods between Russia and China and other parts of South Asia. Sort of contesting a world order that's dominated by kind of liberal oceanic mercantilist capitalism that controls the dollar funding system, access to credit, and global trade. And those systems were kind of in frenemy mode for most of the post 90s era, and we were kind of the hegemon that secured that global system. But for a wide-ranging sort of set of historical contingencies, as mainly the rise of China, it sort of contested that system where it's fundamentally a cog in this larger machine that's run by the U.S. And to a certain extent Western Europe. They wanted to sort of reset the terms there. Like, they're not just going to be like a cog in the manufacturing sort of producing system. They want to create their own system, and that's led to these kind of Eurasian conflict areas, right? Like the sort of autocratic Eurasia going up against quote liberal Oceania, and I think that basic geoeconomic block, like that sort of spans all administrations. But I think the Trump administration's view of it is that's how you get World War III, right? If you don't navigate that competitive dynamic, especially given the fact that, well, one, our supply chains are dependent on China. We saw China just flipped the switch on rare earths, and everyone in the Defense Department freaks out. And inflation can whipsaw in a matter of weeks, and we're just too interdependent to really put guns to each other's heads. And so we can't fight wars, or else we're going to go nuclear and we're going to destroy civilization. We can't even really fight economic wars, because within a matter of weeks, like, ports get empty, and then tens of millions of Chinese urban workers go unemployed, and there start being protests, and the Shanghai clique tries to do a coup on Xi. So everyone realized it was kind of mutual economic assured destruction. And I think they've kind of played that out now in this sort of iterative game, and they realize, okay, we just have to kind of like settle up, right? We have to come some sort of grand bargain. And I think they had to kind of go through certain high stakes bluffs and scary maneuvers, and the financial markets freaked out with Liberation Day. But I think the glide path we're on, it seems, again, there's lots of nonlinearities in this type of dynamic, is that sort of grand bargains are being worked out in real time. And I think the sort of GCC visit is a critical kind of stepping stone to these sorts of grand bargains that I don't think would have happened under a Kamala administration. I think it would have been essentially, can we kind of extend and pretend and kind of maintain the current system of international, there's a certain cohort of folks that manage these systems and that have gained a lot of status and wealth from the flows of overseas development money, military sales, kind of the think tank, military foreign policy ecosystem that was kind of a self-licking ice cream cone. So there was a lot of grift in that system. There's going to be new grift in this new system, right? Like, grift doesn't go away. This is a different type of grift, and there's different people winning and different people losing. And I can say we've gone through like maybe a kind of a cold civil war in the Western political economy, right? Kind of existing factions of say institutionalists that have developed these bureaucratic control structures that allow them to kind of skim off the top of their societies. And you have kind of counter elites coming in that finally, reject that system, but they're not necessarily coming in with like a demos mandate. I think that's a bit more of like a mask that's worn. Ultimately, right, political elites do what political elites do. They just want to get themselves access to, those privileged positions. So I'm in favor of kind of the overall strategic approach that Trump is taking. But I'm also like a realist, right? I understand like the structures of power and human relations. And ultimately we're going back to more like a 19th century style kind of a court slash, almost like pre-Westphalian style like state system where it's like very personalized. Like the reason why Trump goes in, he has becomes best friends with Mohammed bin Salman, and his personal relationships with these national leaders is like basically what tips the scales. It's not, office floors full of PhDs writing white papers on foreign policy. It's like literally like, does Trump like the cut of your jib? And that's just where we are, right? So anyways, that was a bit of a rambling riff, but I think that's a fundamentally very different type of approach than you would have gotten under Kamala.
That was, yeah, I mean, and to summarize, in my view, I look at it's like checkers versus, or chess versus checkers, in the sense of like, you're just having to think about counter positioning where you sit on that board. And that hierarchical structure, it sounds like a very similar structure, except for they're more defined, to your point. There's less like fat bureaucracy of how it's going to be managed. Jackson, I don't know if you wanted to take it somewhere.
Yeah, well, we'd love to stay on this topic, but shift it more into the monetary perspective. So, yeah. Matt, you mentioned on Twitter the Riyadh Accord. So there's this realignment of trade, tech, security, money. So how would you tie in what's happening in the Gulf now to the broader balance of power between China, Russia, BRICS countries, and the U.S. in the fight for dollarization or de-dollarization? So how does this all tie in from a monetary perspective from this global reordering?
Yeah, I mean, to adapt a line from like Zoltan Pozar, who may have himself adapted it from Perry Merling, payment chains are supply chains in reverse. And you could say that like the AI supply chain is a capital flow chain in reverse. Arms sale chains are capital flow chains. So all of these deals, whether it's AI, security arrangements, explicit access to our domestic markets, behind tariff walls, they fundamentally flow through capital markets and the offshore dollar system, which has been, the main vehicle for international commerce in this era of globalization. And the fundamental collateral of that global dollar system is U.S. Treasury security. And so there is a lot of stress being placed on that market and that set of balance sheets that intermediate the flow of global commerce and collateral in a secured global dollar system that uses Treasury securities as funding collateral. And we're printing a ton of Treasury securities, and we've been forced in the last few years to kind of print more at the short end because there doesn't seem to be as much endogenous demand on the long end. And that was a form of liquidity expansion under Yellen called activist Treasury issuance. And so we are in an era where we have a lot of strategic strengths. We also have a lot of strategic vulnerabilities. And I think the Treasury market, our fiscal position, our need to refinance our debt loads post-COVID at sustainable rates is an acute weakness right now. And we saw that as part of the Liberation Day reaction. When the 30-year started hitting 5%, that was when basically Besson got the upper hand inside the kind of court politics around Trump and basically took control and steered things back to kind of a forward guidance, geopolitically tiered approach to tariffs, as opposed to the Lutnick Navarro punch everyone in the mouth, and just collect trillions of dollars in revenue kind of idea, which blew up in their face. And this is where the monetary system is critical to these strategic dimensions, because it's the fundamental boundary constraint on what they can do. Right. I mean, the guy I really like, Marco Papic, he has this, this sort of quip. It's like, preferences are optional, constraints are not. Right. And so politicians want to do lots of things. They want to be reelected. They want to be popular. They want everyone to be rich. Right. But like the world imposes material constraints, and ultimately politicians, what they'll likely do is going to be dictated to first order by what their constraints are. And so the U.S. government and our leadership, their fundamental constraint is the Treasury system. Right. And so they recognize that. And so it's constraining them. And so it's leading to a lot of these deals where the Treasury market is a part of the deal. And on the other side of that deal are countries and national, balance sheets that now recognize explicitly how constrained the U.S. is by its debt position and by the instabilities associated with the Treasury market. And so they're looking to see how they can both hedge as well as take advantage of that opportunity. And so I think you've seen remonetization of hard assets, recognizing that, ultimately at the end game here, and this is, old bromides from Luke Roman and Lynn Alden for many years now, essentially is at the end of the day, like indebted hegemons, when you get past a certain point, you print. And or you do financial repression to force certain, sort of capital pools to sort of eat those losses via financial repression. And then as a big political bargain and geopolitical bargain is who's going to eat those losses? Is it going to be domestic bondholders, everyday American savers, pensioners, people, insurance companies, bank balance sheets, or is it going to be, overseas holders of those bonds? Is it going to be the foreign central banks, foreign sovereign wealth funds, foreign insurance and pension companies? And I think, the order of operations for U.S. government is to sort of first impose the losses on our friends and allies who we have a lot of coercive ability to force, right? Like, say, Japan, Taiwan, South Korea, the UK, Australia, countries who rely on us for security intelligence protection and who, have a lot of Treasury securities, say, sitting at the short end, and we want them to swap those out for longer dated issuances. This is kind of the Zoltan Pozar Bretton Woods 2.0 thesis that we'll sort of force a series of swaps, force them to sort of extend out our duration, maybe even give us some of their gold, and give them 50-year bonds, century bonds, etc. So in that environment, which is effectively, a combination of, monetization, backdoor QE, using foreign central banks' balance sheets. I'm aware, for example, that the Japanese were sort of requesting politely a backdoor dollar swap line to sort of fund long-term debt purchases, right? Essentially backdoor QE. So the Bank of Japan's balance sheet expands instead of the Fed's balance sheets. So this is the regime we're in. And the upshot is, central banks' balance sheets are going to have to expand to sort of finance the hegemon's military, expansion to secure this new zone, this massive technological industrial reinvestment and reshoring objective. Bonds are going to have to eat it. The question is whose bonds eat it first. Anyone that can is going to flee into harder assets. You saw first in gold, and I think you're going to see it in Bitcoin. So that's like a pretty simple macro thesis. And I think that's where it's very much a case by case. And I think it's also why you see maybe Japan getting almost a worse deal than China at the moment, right? Because you would think, right, naively, oh, well, Japan's like an old ally of ours. They're a friend of ours. Like, they should get a better deal than China, right? But if you're from Trump's perspective, you're like, well, no, like, Japan is like basically a de facto colony. So, of course, I can impose a lot more pain and I can like twist their arms a lot more than I can twist China's arms. So, then the inference is, well, China's going to get a better deal than Japan. And that's a fundamentally different way of approaching this than I think the Kamala administration would have been, which is just like, well, they're our friends. We can't like insult them. We can't force them to like eat pain. Like, they're our buddies. And I think Trump's like, I have no permanent enemies. I have no permanent friends. I have only permanent interests. And if you put yourself in a national position of subservience with respect to me, because you rely on me for your security protection, you're embedded in my global trade system that I secure for your, for your economy. Well, guess what? Now I've got you over a barrel. Like, Trump is just a guy who's, a bit sociopathic in that sense. Like, he has no sense of like, oblige to these folks.
And it makes sense from a rational perspective. Like, if you're in debt and you can pay your brother back slower, or whoever is related to your family versus the guy that's going to hit you in the kneecaps, like, you kind of pay the guy in the kneecaps first. It's a rational like move. So it makes complete sense where you would, again, it's all about positioning. It sounds like.
Yeah.
Yeah.
Exactly.
There's $9 trillion of federal debt that's rolling over in the next 12 months. And so, Matt, you laid out that the foreign central banks will probably have to take a nice chomp of that. But I'm sure the Federal Reserve plays a part in monetizing or printing the money for some of that issuance. But the Fed balance sheet, I guess, is only what, 6 or 7 trillion today. I don't know how large the balance sheets are of the other global central banks, but 9 trillion is kind of a large number of debt to be rolled over in the next year. So how do you think about the balance of central banks taking that down in terms of just the capacity to do so? In theory, I guess capacity is unlimited because you could always create more currency, but with the constraints of the treasury market breaking and loss of faith in the U.S. treasuries versus maybe using hard assets to make some of this issuance more appealing, do you think that's something that we'll see this year, or is that something more so further down the road?
Yeah, I mean, there's two different dimensions. That one is like the stock and one's the flow, right? So the refinancing is essentially the stock problem, right? Which is, we have a stock of debt, it's retiring, we need to refinance it, right? And so that's just doesn't necessarily expand the size of the balance sheets that have to take that up, but it now means that the U.S. government has to pay a higher interest rate, right, on the next tranche of whatever those tenors are that it's going to get refinanced. So maybe they issued it COVID at 2%. Now they have to issue it at 5, 4.5%, 5%. So that's like the marginal refinancing cost. That takes a hit, downstream on everything. We're paying more than our Defense Department budget on interest costs, which just squeezes out fiscal capacity. That's like a federal government problem. The flow issue is just the deficit itself, right? The fact that I think whatever the annualized run rate now for our deficit is something like 6.5%, 7% of GDP, $1.5–2 trillion, just sort of ballpark numbers now. That's a lot. So that's the flow. That's like, okay, those are new. That's like net new treasuries that are going to be pushed into the market, just from the federal government sort of deficit issuance. The question is who's going to absorb that balance sheet, right? Who's going to absorb that in their balance sheet? And so if it's all at 3-month tenors, well, there's probably a lot of buyers for that, right? Lots of people will take that as a money-like instrument, not a whole lot of duration risk. But the U.S. government, that's effectively your like payday lending, right? Like you gotta get the roll like every 3 months, and you're much more exposed than to sort of Fed monetary policy decisions, right? And you rather not do that. Like the government tries to target a certain sort of average duration, and the last few years have been front-loaded because of this very issue. And Besant's now kind of stuck with it, and so he wants to issue more at the long end, but I think they know that they can't without either finding a non-market buyer, right? Like a such central bank that can be geopolitically coerced in order to buy it. And I think we effectively have we know we're going to have yield curve control somewhere above 5% on the 30-year. That's about like the mark, plus or minus. We're almost there, like as we speak. And so I think this is where the intensity of these deals gets more significant, because you know, it's hard to go. You can't really, with rule of law domestically, go to, JP Morgan and say, we need you to buy more 30-year paper, especially after, Silicon Valley Bank and SVB, right? Where they realized, oh, like our whole our HTMN portfolio, like once we had to market, went, zeroed out all of our capital, and then we got wound up by Elizabeth Warren's goons. And so it's like, you got to go overseas where there's no rules, right? There's just pure power. And maybe that's part of the Saudi Gulf deal there. What was interesting about that is like this is a bit of a riff, but like the traditional petrodollar system was all commodities, mainly oil and gas, are sold in dollars, and then those countries accumulate dollars surpluses, and then they redirect those, recycle those into our treasury asset, and that helps finance the security protection that then we provide and secure their one-party state regimes. That was a good deal. Now it's like they realize they have better leverage, and so they don't want debt positions now. The Saudis want equity positions, right? And so they're moving up the value stack because it's a new multipolar system, right? If we had all the juice, then we would just be forcing the Saudis to buy more 30-year paper. Instead, we have to do this deal where we allow them to, essentially invest $100 billion in our AI stack, get 18,000 Blackwell server units, do co-investments in all sorts of breakthrough energy and biotech and AI, corporate financing deals and sovereign wealth funds, going into our private equity venture capital markets. So that's a fundamentally different environment where they are, able to acquire more valuable assets and equity, essentially, positions. And so the question for us is then, okay, how does that, what's the mix of debt and equity there? Okay, you get investment in U.S. equity, right? Strategic equity. But we also need you to help, finance the fiscal balance sheet here. So I don't know, a lot of stuff is not being made public, right? Like the flashy stuff, the sexy stuff, the $1 billion in AI and whatever, that's public. How much of this is like, well, you have to take down another 25 billion in 30-year paper every quarter? Like, they're not going to announce that. But some Saudi, balance sheet will show up there, when the time comes for those auctions. So I think something like that's part of the deal here. I just don't think it's going to be made public.
Yeah, it makes complete sense. I mean, this ties in to this. That also, as long as the landing can be stuck and there's not, crazy world war or, too large of a conflict, you can see how this is I don't know if equitable is the right word, but more productive society, right? Like once you actually have tie-in, you hear like equity in certain aspects of our country, but you think about like the relationship in building and just not being insular. And there's been a lot of, you reference drift in our existing fiat or the dollar-based system. But curious, like as much as you're comfortable in talking about where there's been a lot of things that have aligned and that don't necessarily, they look organic but they don't feel organic, like right when you go back to Tether's origins and where that sits and the amount of like demand for that. And this goes back to like DARPA and the internet, right, and the Amazons and Googles and Facebooks of like the notion of public-private partnerships and how they just naturally they've naturally like ended up working out for everyone. And so you go to like Bitcoin's origins and, post '08 crisis and notion that this system is unsustainable. I see you smiling because this is like some of the fun stuff to potentially chat about that nobody gets to, and the guys don't even know I'm going here with it. But so you have like these origins of Tether, but then like the one that nobody talks about is you referenced it on this last pod with Shapiro about it's this easy math of, US take it has roughly 10% of all the gold, right? Where China has like 40%. I believe that was what the numbers you had quoted, where it's kind of like the opposite, or maybe it's not that China has 40%, it's that US has about 40% of the BTC.
Yeah.
And so in this hard money repricing world, it's in our best interest. And the natural version is, well, the version that everyone knows is, well, you got these loud Bitcoiners, they had money, Kamala didn't take the money, Trump did. And maybe that, there's a portion obviously that's true. And then Basant's like, I need other tools and Bitcoin's the tool. But then you go back and it's like, this game's actually already been working for 5 years because Saylor came in out of nowhere and he's been effectively, I like to joke, he's like the white hat SBF. Because while SBF was here to like work on behalf of these other parties, this guy's here evangelizing BTC and bringing it into the corporate structure and onshoring effectively Bitcoin to the US that nobody talks about. And then 23 happens with the ETFs, and Groman's the only person that's picked up on this. And the reason why I've been thinking about it is because I've been having conversations with institutions since back then where nobody wanted to face Coinbase. right? No institution wanted a Web 2, Web 3 company, i.e. FTX, BlockFi. And then on a dime, everyone pivoted and were like, and they referenced GBTC in the lawsuit, but it never sat right. And Groman will cite that we knew we were going to onshore and have a natural inflationary environment. So individuals and citizens needed assets to preserve their wealth so they can actually buy things in that environment. So it feels like some of these things have already been like layering in from the corporate treasury to the ETF exposure. And then this just like helped push it forward. But I'm curious, like, how do you think about that as it relates to the past, call it 6 to 12 months versus past basically 5 years?
Yes. Yeah. So first I'll say like there's a, from a strategic perspective, there's a kind of a set of simple if-thens, right? Like if you're going to reorder the global security, trade, and monetary system, and you're going to impose financial repression, essentially those who you can impose it on, well, that means that like the natural buyer of a U.S. Treasury security is going to have to be like geopolitically conditioned. So the folks that are inside that zone, they're going to be sort of forced to buy your debt. But the people outside that zone that you can't force to buy your debt, they're not going to be your marginal buyers anymore. And so you should expect in that type of system that harder assets are going to remonetize. And that's kind of this kind of gilded Bretton Woods concept from Zoltan that I know has been, in the Moran, Besant orbit for a year plus now. And in that world, essentially you have a dollar treasury zone, right? The dollar treasury sort of standard, like constricts from a global standard to like a more securitized zone, with, our friends and allies in some of the Middle East as well. And then the rest of the world, essentially needs some neutral reserve asset to settle the payments and trade between East and West, essentially. And in this simple-minded system, it's gold. Gold gets remonetized. You have, as Luke would say, the Shanghai Gold Exchange. There's now gold exchanges popping up. A cash-settled futures exchange now looking to open up in Singapore. You've got, obviously, Dubai as a major entrepot. You've had a lot of gold moving, at pace in the 3 months before the election. They sort of did the sort of tariff scare to sort of create that arbitrage in the futures market to actually force physical settlement back at New York away from gold and sort of emptied the London gold vault. So there's a lot of strategic movement of monetary metals, gold specifically, in the last 6 to 12 months, accelerating in the last 3 months. So in that world, it's all about remonetizing gold, right? That's like the sort of baseline central bank kind of normie BIS play. To your point, if that's your play, then if you also at the same time have Bitcoin in the mix, and if you are going to be a pro-Bitcoin, administration, well, then what would you do and why would you do it, right? Well, Bitcoin, we happen to have, through a variety of historical narratives that you could, tell that you just laid out, we have developed a pretty dominant position in just the physical ownership of Bitcoin. And I did that math on the podcast. I think, it's a guesstimate, but if you add up apples to apples, the Bitcoin and gold held by individuals, say custody ETFs and on government balance sheets, we have about 8 to 10% of the above ground gold stock, in the US, it's collective, ownership, and about 35 to 40% of all the Bitcoin that's available. And so if you're going to run this play where scarce assets, hard assets, are going to be remonetized, you're going to take more of an official position in the global monetary and trade system, well, you have at least a 4-to-1 advantage by allowing Bitcoin to monetize relative to gold. And we know Bitcoin moved much faster than gold in such an environment, so you could probably get a massive multiple on that. So the strategic upside to you is much more like asymmetric there. And okay, like this is where you put on your conspiracy hat. Like, did they see this coming? Like, how far down the line did they see this coming? And was this all kind of like a sophisticated plan? I've been writing about it for a number of years. Am I the only person that thought this could happen? Like, it seems a bit hubristic. I don't know though if they were like as I don't know if like you could say, how could you forecast that Trump would win, right? Because if Trump didn't win, then this play may not work as well, right? Like Elizabeth Warren's army comes out and Saylor gets hit with all sorts of investigations and whatnot. So I think like all things, there's competing power structures in our U.S. political economy. There's not one sort of high table master planner that's running the show. There are, but I believe there are, and there have been a contingent of folks, quote, in the deep state, you could say, that we're watching these dynamics play out over many years, right? Our dependencies on China for our military industrial supply chain, hollowing out of our defense industrial capacity, kind of the enrichment of Wall Street at the expense of Main Street, and the rise of China that was sort of facilitated by Wall Street. And so there's a schism, right, between, you could say, DoD and Wall Street, and Bitcoin to a certain extent aligned more with the DoD elements than the Wall Street elements. And I think you're seeing that now play out along with a lot of other realignments here, where Bitcoin is just, I think it's like Chekhov's gun, right? It's like it's on the table there, and you kind of know it's going to be fired, right? Like someone put the gun on the table, right? And it wasn't quite sure where it would play a role in the plot, right? But the story's playing out, a lot of things are happening, and it's just sitting there, and people that are like autistically obsessed with that gun are just staring at the gun. That's us. And they're like, when is he going to pick it up? Is he going to pick it up now? And it's, oh, no, he came in, left the room. Okay.
Yeah.
So, but then you're just waiting, but you just know the gun's going to get picked off the table at some point.
And there's a few things you shared here, and then on the other pod, which I'd encourage people to listen to, is the thing that makes a lot of this like ephemeral and hard is that there's no concrete like individual doing anything. So there's different factions within different countries that are always competing. And so to your point, it's like nobody knew Trump would win, but you had these different things happening in parallel, and then this is one of the routes. And one thing to call out, I think, as a mental model, because it had existed, was like BitMEX and then FTX. They were effectively the same thing, and it always was weird in my own head that like BitMEX was villainized back in the day, while FTX was the same thing, and it was like lauded, and you had Clinton and all this stuff, and it was always like a weird notion. And this ties into you're referencing on how you can lean on certain parties that need you. And so Tether probably started like somewhat organically, but it's the notion of nobody ever talks about back in the day that when you're putting that much capital through the banking system, you literally have to be working in behalf of like the banking system to make sure that capital flow. And this was when I was getting into the space professionally, was in 2018 when NYDFS sued them. Or late 18, 19, I might get the dates wrong, but it was basically where they started looking at the capital flows, and they seized the 500 million, I think, in Latin America, and that's when they launched Leo. But point being is like that could be a line of demarcation where it's like, well, wait, we need to work this out together, because this is, to your point, that demand for treasuries. And it's interesting because they talk about it now where their like reference point of that nobody can compete with them is that they're close to the dollars, like, or like physical fiat in the countries. And it never hit me until listening to that pod you're referencing that there's always existed these like black markets for capital that are funding other things. Or no, it was a different pod that you referenced on
Yeah.
the Carlisle stuff. But it was like,
Yeah.
it's starting to all like wrap around where you can see all these like capitals flowing into the system, and nobody knows where it comes from, and it's doing these things. And you need mechanisms that can be leaned on by the US government to make sure it affects their how they want to express their view of the world.
Yeah, and the Defense Department now explicitly has an Office of Strategic Capital. I know some of the folks that help run that office, and they have sort of venture capital funds and private equity companies that sort of are officially deputized by them. And this is above. There's some stuff that's covert and clandestine. Some stuff is just normal stuff. But you can imagine, the battlefield of strategic competition is not just about building carrier groups and setting up military facilities and strategic deterrence. It's who controls ports, who controls airfields, who controls strategic mineral deposits and refining supply chains. And those are economic entities, right? Those are privately owned, incorporated, LLCs that own and operate this infrastructure and these resource supply chains, which are, between US and China now, like that's the battlefield, right? And so if you do nothing, China's going to just own all those ports and facilities and rare earths. Is the U.S. government? U.S. government doesn't really have state-owned enterprises that operate in the same sort of like state-controlled, like go and just buy this on behalf of the U.S. government, right? But we do have aligned capital, right? That if given financing incentives and patriotic encouragement, will go do those things. And so there's that dimension of this, which is just strategic competition. How do we ensure the U.S. government's interests and equities are manifested through the financial system? And then there's the more dark side, right? Which we've seen manifestations of that go wrong, right? Where you have covert activities that need to finance themselves, and they don't want to ask Congress for money. And so, you need to compromise a hedge fund guy, or you give a hedge fund guy access to non-public information, and he trades on it, and makes a ton of money. And the deal is he gives you 80% of it. That's a pretty simple way of financing covert operations. And I can tell you, like, multiple intelligence services of multiple countries do exactly that. That was actually one of the guys that we did a prisoner swap with for Russia, was a guy that was doing that for the Russians. Insider trading, fed information from the SVR, and, the deal was he would route those profits back to them. So, financial markets, global capital markets are not just like, the idealization of, It's all, private sector competing agents here doing arbitrage. There are all sorts of multi-level games being played to exploit those systems. And you can go back to like BCCI, the Bank of Commercial, whatever, Commerce and Credit International, which was, essentially a CIA front group. And is very connected to like Deltec Bank at the time. We know, what Deltec's connections into the crypto space were early on. And so, it's like, doesn't take you don't need to be like Charlie with the red yarn to like come up with like a pretty plausible hypothesis here that the U.S. government is not dumb, right? Like they know about this stuff, right? The question is, okay, how much of it is a long-term play versus how much of it is just taking advantage of the balance sheets and the capital flows, and the mechanisms that are available to you at that moment. I think it's more likely the latter, right? Like most bureaucrats just want to find, like water finds its level, right? And so if you're like, I need to do a thing, what's around here that I can use to do that thing? And if, stable coins exist, I'm going to use that thing to do a certain thing. I think now it's more recent, the strategic element has come into play where when Tether is $5-10 billion, it's useful for covert operations. It's not useful for strategic things. Now when it goes from 100 to 200 billion to $1 trillion, now it's much more useful as a strategic tool for U.S. Dollar dominance and sort of expansion of demand for our debt than some pass through for some covert operation. But at the end of the day, this is the give and take between the security state, which is always amorphous and driven by people, and people change, and those people become Bitcoiners, right? This is the other thing that I've noticed is like when I first got involved with BPI, I wrote this white paper, Bitcoin, U.S. National Security, like an initial assessment, and I learned it had been circulated inside the CIA. And actually, two of those individuals that read the paper, I don't know if I was the single tipping point for them, but they both left the agency. Actually, one was a ground branch kind of tier 1 special operator guy who did some work with the agency. The other was a case officer. And they retired and they started Bitcoin mining companies and started working in Bitcoin. And they're just like it wasn't like an op. It was just like, this is more interesting and more compelling and more rewarding to me. And I have certain skills and I can apply those, to my business, wherever it might be. But like people are people, right? And Bitcoin is compelling to a lot of different sort of personality types. Our director of government affairs is one of these guys. He was a career CI officer. He was like deputy in their cyber division. He was going to Bitcoin meetups. And just like, live and then retired and then wanted to get involved in Bitcoin. But his skill set, like the closest he could get was for a blockchain analytics company, which he really didn't like, right? Because it's not really the same thing. So the first opportunity, we're like, hey, man, we would love to like, and he come to all our BPI stuff. And he's just like, a dyed little Bitcoiner. Now you're saying, is he just like playing the part? Is he doing it? And, it took we had to put him through some tests, right? It was like, you stick your hand in the thing, right?
Well, the beauty of that is all the incentives are always aligned. Like this is where your story really resonated because we see this at folks we hire, and I mentioned the investment fund we operate, and it's called Early Riders because it's literally built on it's the early riders are going to rebuild the world that are forced out of the sector that they're in because the bureaucrats won't listen to them. They've just tried as much with the carrot, and now it's the stick time. And the stick is, hey, I'm just going to rebuild this faster, more nimble, with a better unit. And so that's, ultimately, if he's holding a Bitcoin bag, it's his interest to actually make sure it works with you guys, or he's kind of like self-defeating in a sense.
Yeah, go ahead, jump in.
I was just going to say, I wanted to go back to the analogy of the gun on the table. I love that. And like, I'm curious in your mind, what is the tipping point to someone picking up the gun? And because I think to the layperson, perhaps the United States creating a strategic Bitcoin reserve was like nudging their hand towards the gun. But there hasn't been, to be fair, like a ton of follow through on that idea. We still haven't gotten the audit of how much Bitcoin we own, which was promised, I think, 30 days out. And now it's, 2 months past that. So curious your thoughts on, the follow through on the strategic Bitcoin reserve, one, and then also like, what is that tipping point for picking up the proverbial gun on the table?
Yes, and that's where we go from this sort of more abstract discussion of like the brass tacks here. Because yes, the executive order, the history of the Street Bitcoin Reserve is fascinating kind of case study here. So, some of this is not entirely public, but so back in August in Nashville, Trump gave a speech. BPI was asked, if we had policy suggestions to send to the speechwriting team. We had some ideas, threw them down. One of them was the SBR, and we were pushed back. This is like, there's been nothing written about the SBR. This is like It's like a meme. Like somebody just made this up. It's not a real thing. And so I wrote like a little memo. I was like, no, it's a serious thing. Like this is the reason why it should, it's like a strategic element of our Bitcoin policy and our approach to statecraft. And I got it in speech. And so first domino, right? And then then he has to get elected and then do the thing. And then it's okay. We have to draft up a bunch of white papers now to like reinforce that idea. Like this is a serious thing, and then draft up like a notional executive order. Like if he gets elected, well, here's a way you could do it, right? Like if using existing funds, existing legal authorities. There you go. Now we didn't ghostwrite the executive order, but we put ideas on the table. Executive order gets signed, establishes SBR, declares Bitcoin a strategic asset, digital gold, 21st century. Important for us US to lead. And then specific instructions are given to the Commerce Department and the Treasury Department to identify budget-neutral ways of acquiring additional Bitcoin for the SBR at no marginal cost to the taxpayer. And that has been, given as instructions. We are waiting, from the public's perspective, to hear back. Well, what are those ideas, right? Because what does budget-neutral mean, right? Like, there's no technical definition. It's a matter of interpretation. And therefore, it's a matter of interpretation depending on the bureaucrats and the senior officials that are now given this White House mandate to follow through. And that's where it requires kind of in the trenches, analysis and advocacy to sort of tilt, this machine of state in the more bullish direction relative to the more conservative direction. Because a more conservative bureaucrat who gets that mandate could say, well, budget neutral, well, almost nothing is budget neutral. Right, because I could always take any available set of assets, liquid or illiquid, and I can always use it for some other thing on my government's program of record. So anything is by definition like an opportunity cost for the government's budget, and so I should spend almost nothing on Bitcoin. Right, an alternative interpretation is that budget neutral means I can't take existing congressionally appropriated funds for my FY25 budget and use those for Bitcoin. But that leaves a lot of other sources of funds to acquire Bitcoin. Tariffs, oil and gas royalties, spectrum auctions, existing assets that are held on the government's balance sheet that are not Bitcoin that could be liquidated for Bitcoin, whether it's federal land, leases for federal buildings, or ownership of federal buildings, existing non-Bitcoin digital assets, all the way up to revaluing gold certificates. And so the span of interpretation bureaucratically goes from buying almost no Bitcoin to buying a massive slug of Bitcoin, right? And so the executive order doesn't really tell you where they're going to land. And the White House themselves didn't say where they're going to land. And this is now a person by person issue inside the White House, who wants to lean in which direction or the other. And this is why there's different camps, right? Some more conservative, some more aggressive. And the way the Trump policy apparatus works, this isn't there's a whole bunch of hierarchical set of studies, right? Where there's committees upon committees upon committees, and then there's a bunch of just COAs. They have the President's Working Group on Digital Assets, chaired by David Sachs. Bo Hines is running it as the crypto advisor, and he's trying to essentially quarterback this. And so he's critical to this. So he's taken these ideas, but then he has to kind of work by consensus from my committee, because ultimately it has to be recommendations from the Treasury Secretary and the Commerce Secretary, Lutnick and Besson. And they're doing lots of other stuff, right? Post-Liberation Day chaos, Middle Eastern trillion-dollar deals. And so Bitcoin is just not at the top of their, paper stack, right? And so I don't think it's for lack of it. It's again, we're the autistic people paying attention to the Chekhov's gun, but there's 5 other people in the room and they're having fist fights and there's a fire in the corner and there's someone's there's other things happening, but we're just no, pick up the gun, guys.
Bitcoin's the thing where the guy's smoking the bowl while they're fighting. They're just
I think it's less this we're now at the point where it's less this geopolitical exogenous sort of monetary game. It's much more the inside the court of Trump and these very specific number of finite people that have certain authorities to make decisions, in the next few weeks. and that's harder to predict, right? It's easier to model state relations to a certain extent than these 5 people and where they stand on this particular question. You have to get inside their heads. And even if you talk to them and they say, I'm going to do X, that's not necessarily a strong predictor of what that person will literally do the next week. Right? So there's lots of people who get told by some of these people, oh no, X is definitely not going to happen. And then X happens a week later, right? And so there's just, I have enough hubris, I have enough humility, I would say, to say I've been told various things, again, grapevine, that yeah, this is going to happen. And I just go, okay, like would be great, right? But like I don't know how much of a leg to stand on there. I would say just like finger in the air, the vibes. If I'm going full vibes capital management here, like the vibes are tilting. Like a month ago, post Liberation Day, I would have been more bearish. I would have said they're distracted, 5 alarm fire, Bitcoin's not on their agenda. They've got other things to do. You know, we are one voice in this like hurricane trying to like advocate for this thing, and we're being drowned out by stablecoin bills, you know, shenanigans with the Dems on market structure and all this other stuff that most of the crypto lobbies are obsessed with, because that's what they've told their bosses they're going to get done this year. There's not much of a natural constituency prioritizing Bitcoin and SBR really, except for us. And so, you know, we're scrappy, but like we don't have a megaphone. So I was a bit more bearish, I'd say, a month ago. I'm like, you know, they might just like throw us a bone here. But I've become increasingly more optimistic. Again, more vibes per se than anything like definitive, because you have to like, you know, put a large discount factor on all sorts of the rumor mill. I don't know, but I'm increasingly of the opinion that they're going to buy a significant amount of Bitcoin.
But Trump and Lutnick are like just pure vibes capital like co-founders, right? Like where Trump,
Yes.
literally just wants to own all the Bitcoins, and then Lutnick has been talking about, Bitcoin's price and obviously Cantor and what's going on there. That if you had to make a bet, it just the incentives also align. Where it's like, why don't we just own all the Bitcoin in the U.S.? Let's figure it out. And Trump leans in a direction that way.
And this is where like there's two ways of interpreting silence, right? You can interpret silence as they're ignoring us. It's off their radar screen. It's not a priority. That's the bearish interpretation. There's another interpretation which is like it's so serious they're like shut the fuck up, right? Like we're gonna go hard, but like you better not, you better not even like smirk at the direction of a mic, right? Like this is high stakes. This is for real. Like this is not like a little side thing anymore. Like the big boys are now involved, and when that happens, it gets serious, and you just shut your mouth and you maybe even lie about what your plans are. Right, so there's two ways of interpreting, what's going on here. I'd say
The alternative is MicroStrategy could end up just being the U.S. government's coins at a certain point, and then they already had a big stockpile. But that's a
I
different
mean, I know
topic
that's
for
kind of like, yeah, I mean, that wouldn't be at the top of my list. Like, the government can acquire Bitcoin from other pools without, hitting domestic balance sheets. Like, I'll just put an example, right? The fentanyl gangs and the Tren do Agua and other South American and transnational criminal organizations were designated as terrorists officially as by executive order. When you designate those entities and those leaders as terrorists, there's a whole bunch of national authorities and national capabilities that you can now point at those people, and they're using a lot of crypto. So wouldn't it be nice if we could just go after these fentanyl gangs and these cartels and fill America's SBR with no marginal cost to the taxpayer? So there's other ways that you could go after that without, I think Saylor has lots of lawyers, and we still live in a rule of law country. Like, if we're in a situation where the government is seizing Michael Saylor's Bitcoin stack, like, a lot of things have gone horribly wrong in America. And, we are in... There's lots of other things that you should be worried about at the same time. And so you should be... Your contingency plan there is less Bitcoin, more your citadel and your guns and your self-protection. So I know we like to plan for lots of worst-case scenarios, but that's not the top of my list. I think there's other... The government wants to buy some Bitcoin. It can go buy some Bitcoin. It's got the money printer. Path of least resistance, always, right? Like, constraints determine action.
But how do you square or balance like the perception of like, if they went full just like we're going to print money and buy Bitcoin, I think there would be a natural tendency to then question the dollar system more granularly. And so I think that's part of the dance too, is like they can't get too aggressive and really forcefully grab the gun. They kind of have to do this quasi dance and not be too overt in what they're doing. Would you agree with that?
100%. Yeah. I mean, all fiat currencies stand in a superposition of positive value and zero value. And there's nothing in between. And so you, as a hegemon who issues fiat paper claims to your future tax revenues, would not want to undermine the confidence in the global markets, sense of the value of that fiat claim. And so you have to, essentially it's calibration, it's communication, it's forward guidance, it's proportionality. So if they were literally saying and executing on a plan of acquiring as much Bitcoin as they could by printing money, well, then everyone's just going to sell what they're not buying and buying what they're buying. And then you're Bitcoin, hyper Bitcoinization overnight. I don't think that's in the cards. I don't think that's in the cards anytime soon until, we're literally, on the precipice. And so, but if the government were to buy in a budget neutral fashion a few 100,000 Bitcoin, for, we're talking from the government's balance sheet's perspective, like less than $100 billion of anything is like, it's like kind of, it's in the rounding of the national
Right.
of the national GDP. But it's also a signal, right? Overall, I mean, my argument has been with the Bitbonds idea is that if you're going to do a pro Bitcoin strategy, like one way you could mitigate that risk essentially is synthetically graft on that hard asset that you're monetizing into your debt issuance. Right. So this is, maybe not phase 1, but maybe phase 2, phase 3, if we're going down this particular road here, is Bitbonds, right? Which is basically that, right? And gives exposure to kind of a volatility controlled, security that has, relationship to Bitcoin and actual Bitcoin payouts. And the government gets to essentially take proceeds from that debt issuance, fill up the the SBR, and they could potentially issue that bond at a lower coupon. And so they get to borrow cheaply relative to what they otherwise could. And so they think there are clever mechanisms the government could go about in terms of acquiring Bitcoin while still servicing its debts, while still maintaining confidence in its debt markets. At the end of the day, right, like sort of recapitalizing itself, right, over time, right, with hard assets, which is, people speak about this in monetary economics like very casually when it comes to gold, is because that's been the thing that we've done before with gold. Like we've gone on and off gold standards as different countries over different times. So it's like not like a conceptual, new thing for that to happen. It's new to think about it with Bitcoin. I don't think we would go on a Bitcoin standard anytime soon. But diversifying your national balance sheet, acquiring a hard asset that you can asymmetrically monetize relative to, say, Chinese gold, and use that to also help fund these strategic techno-industrial investment projects. Say you use some of the SBR to act as seed capital for a sovereign wealth fund, and do energy and AI build out, instead of relying on Saudi and Gulf money, right? Like if I had to pick, Koa A, Koa B, hey, let's go and kind of buddy up with a bunch of Gulf kings to beg for their trillions of dollars of capital to flow into our AI, and therefore we have to give them access to frontier AI models, and maybe even AGI gets born in the desert of Saudi Arabia or the Emirates. Wouldn't it be nice if we could actually capitalize those investments without having to go to these autocratic regimes? Couldn't we just, put some high-powered digital gold in the sovereign wealth fund, run that up turbo, turn 50 billion into 500 billion in a few years, and then boom, bring in public-private investment, leverage it up. You've got $2 trillion in dry powder to fund your techno-industrial domestic renaissance, and you've got no foreign entanglements or obligations.
Hope you're enjoying the episode. Just a quick break to tell you a little bit more about something we just launched. On-Ramp Trade is our new account tier built for individuals who are ready to start accumulating Bitcoin or want a simpler, more secure way to grow their position. Think about your friends and family. Maybe with Bitcoin crossing 100K again more recently, perhaps they're asking you questions, or they might be soon, and so they need a secure place to buy Bitcoin. Whether you want a dollar cost average, make one-time purchases, we have designed On-Ramp Trade to give you very low fees, a fully segregated custody account, so you have your own Bitcoin in your own wallet on chain. You also have access to the On-Ramp terminal. You have access to the On-Ramp team as well, human support, no chatbots, no emails getting lost in the abyss. You can see Cam, the stud in the bottom right hand. You can talk to Cam if you want to. And right now we are running a launch promotion with the code TLT through June 30th. So there's actually 0 trading fees through September. So you can just be smash buying without even having to pay any fees there. And then it's also 50% off account fees. And you can actually earn $50 to $150 in Bitcoin for each person you refer to OnRamp once you're signed up. So if your friends and family need a place to buy, or you want to buy some more Bitcoin, take advantage of these low fees for foreseeable future, head on over to onrampbitcoin.com. You can sign up in minutes. or you could also speak to us on the consultation. You can do that from the homepage as well. Now, hope you enjoyed the rest of the episode, and all the best to you. See you later.
I think no, it makes sense. I think like from the capitalistic opportunistic perspective, I think everything you said, it ties into this notion of the traditional 60-40 and how, individuals all the way to sovereigns have preserved capital in equities and bonds is completely everyone in the gold camp, as you alluded to, is like known this, the hardcore gold bugs, but there's never really been a viable path, but also kind of from the powers that be signaling it, meaning like gold and Bitcoin become money and everything else is a credit instrument. And that's a huge, like, still taboo to talk about today, even though gold's sitting at whatever, $3,000 a troy ounce and Bitcoin sits over 100K. And so as that repricing happens, there's just going to be a lot of people left holding bags of kind of like, they're going to slowly migrate over, but they're going to be left holding bags of real estate, bonds, traditional equities. And so I think that's just like an overarching theme. The other aspect, and I know we're coming up, we got about 20 minutes. I don't know, Jackson, if you want to take it in a different direction. The thought that Matt brought up is there's something interesting I think you've been talking about in this convergence of multiple like taboo or things that are just so kind of like wild that they're all coming together, which is the AI, AGI component. There's Bitcoin, and then there's the natural like UAP conversation. And they all like kind of tie back to energy in my mind. I haven't thought deeply about this, but curious how you think about where Bitcoin's almost like this canary in the coal mine for finding the cheapest source of energy to mine, and then you're seeing like the existing miners or the compute going in, like picking that up. But then even again, just limited knowledge on the UAP side, it's like a lot of these sightings, or at least a big portion, are around nuclear and around energy. How do you just think about like that world and where this like UAP conversation is coming up? And I know it's something that you're known for to talk about. And I
Yeah.
think a lot of people aren't familiar with a lot of these concepts. So just maybe starting at the very high level would
Yeah,
be good for
we'll sort
people
of
to.
tiptoe. We'll sort of tiptoe in here. The water's warm. But to your point, like, well, one, like Bitcoin, I think, is a anti-fragile asset that has asymmetric option value relative to global disruption. And we've talked a lot about the disruptions coming from the geopolitical and monetary kind of fragilities and shakeups here. And we think Bitcoin has sort of, asymmetric upside relative to those disruptions, right? So you want to own Bitcoin because you think, indebted governments are going to have to print their way out of it. A fragmenting global system is going to inherently rely on, decentralized, cross-border, trustless means of settlement. We're still a digital civilization, so we're going to want to settle in a digital, reserve asset. Doesn't have all the physical and transactional and verification costs of gold. The typical bromides, bull case for Bitcoin, that gets Bitcoin to, parity with gold, right? And I think that's probably going to happen in the next, 3 to 5 years. Bearish. But that's like, okay, the normal, like, again, kind of like most of what I focus on. And there's other disruptions coming in, right? A lot of focus is on the accelerations coming out of these frontier AI model labs. And there's been a lot now of the discourse inside the Bitcoin community on how that will intersect with Bitcoin, right? Whether an agent-based digital economy is going to use Bitcoin as a medium of exchange, as a store of value for their own economic activities. That don't have bank accounts, so they need to have a digitally native, currency to hold and to transact, through and in, which seems plausible to me. Obviously, Sam Altman has his druthers. It'll all be WorldCoin, so we need to nip that in the bud. But this is another convergence of kind of these accelerating technological disruptions that are going to have like cascading impacts on our monetary, paradigm. So I think there's a strong positive like loop between AI and Bitcoin in many ways. There's like maybe other macro level questions about AI that are more about how it affects, the social fabric and division of labor, and where those surpluses are concentrated or diffused in society. Are those just like hoarded by a bunch of, techno oligarchs? Is there some UBI? How is that managed? There's a whole bunch of other questions, and that might have spillover effects on how we think about Bitcoin over that 3 to 5, 10-year timeline. The UAP question is another one of these questions I think people don't pay as much attention to because it's been shrouded in a lot of historical taboo and stigma, intentionally so, on the part of the relevant government interests at play. But it will come in to the top, to this discourse sort of shift. We saw Bitcoin go through, like Overton window moved, talking about Bitcoin seriously inside DC was like a fringe thing when we got started at BPI. And now we're hosting events. And I'll tell you, the people that you're going to see at our policy summit on June 25th, which, by the way, sign up, bttpolicysummit.org. You can go to my Twitter account. It's my pinned tweet. You can use Statecraft for a free ticket. So people listening, if you're paying attention, you can Statecraft to get a free ticket. But you got to sign up. I might change that discount code, but in the next week or two. So sign up because I think the people you'll see at our policy summit will, align with the topics we've talked about here. Like the level of people that are going to talk about Bitcoin in its very serious fashion from a strategic standpoint will surprise people. I'll just say that we haven't announced some of those people yet. So that's this track here. Like this Overton window shift can happen pretty quickly. And in our particular domain, it wasn't a surprise to us because we're like, of course, Bitcoin is going to, go to the moon. Of course, it's going to be a strategic asset. Just the world doesn't recognize it yet, right? We're the in-group that shares a common set of sort of shibboleths and sort of canonical lore and kind of a bit of religious, belief system that there's going to be some future redeeming event, hyper-Bitcoinization where I'll be proven right and the no corners will be proven wrong and the world will sort of bend to my vision of things. That may actually objectively happen, with Bitcoin. But we think that's normal because we're in that in-group and we've seen that Overton window shift in real time. AI, similarly, folks that are in that in-group have seen this move from less wrong blog posts talking about the AI superintelligence takeover, existential risk, Nicholas Bostrom, Eliza Yurkowsky, all this sorts of stuff. I wrote a whole novel actually a number of years ago on quantum AI superintelligence takeoff scenarios. So I was in that in-group as well, and I was like, oh, this is a thing. And that's now moved to the center of the discourse. There are now lots of high-level policy conversations happening as we speak on, the timelines for AGI and what that means for geopolitical competition. We're having these multi-$100 billion, deals done with Saudi Arabia to box out China. It's driving geopolitical decision-making. UAPs, I've seen this play out. I've learned to sort of look around kind of the corners here and see those little moves on the like the tails of the distribution to see those shifts. And this is coming in. It's coming in faster, I think, than even some of those other ones did. There's a large, that's a multi-hour conversation, like what's exactly coming in. But the basic premise is that, we will have to accommodate ourselves to the fact of non-human intelligence, advanced technology. That's a product of that non-human intelligence. Israel is interacting with humanity, has been interacting with humanity for some time. And there are government programs that have been dedicated to this for many decades. So those are just facts people will have to accommodate themselves to. Some will accommodate themselves to those facts sooner or later. It'll be uncomfortable in various fashions, but then there's a lot of downstream implications of that, of accommodating yourself just to those bare facts. There's other facts associated with that, that go in lots of different directions. The most relevant, you could say for Bitcoin as like a hedge is technological disruptions to our physics paradigm, right? And a good thing about Bitcoin is the difficulty adjustment, is that even if we have breakthroughs in energy production within 2 weeks, right, the hash rate will adjust. Now the question is more about security concentration of whatever that new production is, if it's dedicated to ASICs. Ultimately, concentration of energy goes through concentration of compute, and so it's more a function of who has access both to the energy and to the compute. I think the upshot of the NHI UAP story is the technology component and the physics component will be far down the line of public discourse and disclosure for a lot of non-proliferation and existential risk concerns. There's a reason why they've kept that secret for so long. There's, certain things you could pull out of the black ball of science that would be, we pulled out nuclear physics and those give us nuclear weapons. And it was the fact that it's somewhat difficult to create high purity uranium and plutonium and then get the triggers right to make a nuclear weapon that keeps that risk somewhat constrained. If there was aspects of physics that were easier to weaponize, well, those would be dangerous things to spill into the public domain. I think that's part of the consideration. I think there's also lots of other things going on associated with the evolution of these programs over time. And it's part of the geopolitical bargaining that's taking place right now. Trump is alluding to breakthrough weapons systems that nobody understands how they work. And he is, dangling that out there for a reason. There's, a lot of reconfigurations happening behind the scenes associated with these historical conflicts that are being, snuffed out quite quickly. At least that's what they're trying to do. And this looks like setting the stage for, if you're going to be forced to accommodate humanity to a reconfiguration of its place in the universe, you want to kind of get to as stable position as possible, as quickly as possible. I don't have a particular timeline. I think there's a lot of if-thans embedded in this, but we are on a trajectory where, the sooner, it's like with Bitcoin, it's like, the sooner the better. You accommodate yourself to what's happening. The more you'll be prepared for the change that's coming down the line.
Yeah, I appreciate you running through that, and especially in that framing, because I think for a lot of individuals, a lot of this stuff has never even been brought to the table. And so helping through the lens of, well, Bitcoin was insane until it's not, and AI is insane until it's not, because we've heard since we grew up watching, Terminator and stuff. And then ultimately just a little bit of a tease for individuals to go down. Personally, it's interesting because I've always thought about Bitcoin as incentive alignment is just too perfect that had to come. And we don't have to go into here, but it's like it's too perfect for it to be created by man. And to your point, where I think you're kind of going is like, well, if it's naturally tied to energy and the reflexivity of the difficulty adjustment, it keeps the constraints tied in effectively. And I remember when the AI stuff was picking up in 21, I knew exactly where I was at when I was like, oh, well, AI, like Bitcoin actually protects us from AI because you have to plug in those systems and pay it with something to keep the energy. Like the energy has to come from a foundational, constraint of society. So it's all fun and like not even fun. It's just it's constructive stuff to go down. So I appreciate you running through it. I don't know, Jackson. Go ahead.
I was just gonna say like it's hard to kind of bite off on which it's like trying to explain Bitcoin to someone the first time. It's like you're fucking crazy, magic internet money, cryptography, game theory, the history of money. Let me talk to you about cowrie shells and da 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 da. And then people go, there's like a tiny percentage of the population that goes like, oh, that's interesting. And then they go down the proverbial rabbit hole and they self-educate and they come to some conclusion about the risk-weighted probability of this Bitcoin thing being a serious thing, and then making a life choice to invest substantial portions of capital. I think there's the same sort of epistemic and personal, dynamic at play with this topic. There's a lot of initial rejection and taboo and kind of resistance to the a priori, premise, right? That a lot of people just reject out of hand. And there's some people that go, oh, that's interesting. There might be something there. And they pay attention to what's happening on the government side and other areas, and they follow the thread and they self-educate.
Yeah, and it's all objectively true. Is the crazy part is like I think it might have been one of the pods he did with Danny, but it was something that was said. It ended in the most kind of like ominous, like if this is true, it changes everything. It was something to that effect, and it was referencing the Disclosure book. And so I went to go start listening to that, and there's just like all the accounts. Like it's just like we can objectively say that the debt system is unsustainable. Most people will be like, no, it's fine. And you're like, no, there's like enough proof here. It's very similar to what you're describing. It's all out there. But I did want to give some more burn to BPI because I know you touched on it. But we don't have to. We can, in the last kind of like 7 to 10 minutes. Incredible work you guys are doing. Like we deeply not only respect, but have been in the space for a while, and have seen how hard it is from like, from the venture side and crypto coming in and just getting people to support altcoins and go out on the risk curve and just blow their businesses up, all the way to the quote unquote lobbyists that are, have all the dollars to spend, and you guys being in a doing things the right way on the think tank side, but also having natural constraints. And so anything you want to share about that and where people can reach out or get involved or allocate capital to help kind of further the cause on what you're working on. I think it's super exciting because you've been a leader speaking in the space outside of this space, like where you're put food on the table. Now you get to do both, which is really exciting. Because having your mind focus on this, I think we'd all agree is super impactful for kind of furthering Bitcoin.
Yeah, no, I mean, everyone at BPI, like, there's like an implicit filter or self-selection. Like they have to kind of get the bit, right? And they're all funnily there to like, self-actualize, you could say, right? Like a lot of think tanks, they get set up in DC to kind of be self-licking ice cream cones. They want to do the same summit every year, kind of the same panel discussions. They keep coming back to their donor base to be like, we need to do the thing. Like we're like here to kind of like supernova. It's like start with a bang, expand as quickly as possible to like have the strategic impact in this relatively limited window we think we have to like decisively shift the future trajectory of the US and the global adoption of Bitcoin. And then potentially do something very different, right? Like it's like Bitcoin needs like maximal support, like in the next 12 to 24 months, you would say, right? And it needs to be like an implementation tail. But we've kind of came out of kind of a glorified blog state 3 years ago. We now have 8 full-time staff inside DC, a total of 10 full-time staff. We've got a bench of 23 fellows, national security experts, energy policy experts, philosophers, economists, former deputy governors of central banks, right? Like we've got like a deep bench of people. But honestly, like we're still, I would say, 10% of like the policy advocacy crypto community inside DC. And you think about like Bitcoin is maybe 65% of the market, right? If you throw out a lot of, explicit nonsense, we're like 95%. So like we're completely inverted relative. And I think you see that reflected in the outcomes inside DC. It's like, why is stablecoins the first priority, and then market structure, and then the SBR, right? If you were like objective, you had no inside analysis of how much sunk cost there is from all the sort of crypto industrial complex there, you'd be like, well, of course, the SBR is the most important thing. Do that first. That's like the foundational neutral reserve asset that floats everyone's boats and also aligns more explicitly with U.S. national interests here and our values around the world. Isn't just like special carve-outs for a certain crypto business model. But instead, it's the inverted. And that's a direct function of just how things are apportioned inside the DC, sort of ecosystem. So yeah, we want to essentially scale proportionally to Bitcoin and Bitcoin's impact, and try to make sure that at least the policy environment inside DC is at least like market weighted. And we're at least, I'd say, 6 times away from that in terms of our current budget to where that would be market weighted. And so yeah, we're aggressively looking for supporters and expansion. We're also looking for thought leaders, folks in the community that have insight and curiosity about intersection of Bitcoin, the energy system, Bitcoin and AI, Bitcoin and national security, Bitcoin geopolitics, Bitcoin and blank, right? Basically, and there's a lot of Bitcoin and blank things out there, and so we're always looking for folks to come in with ideas, suggestions on white papers or events that they would like to help host, expertise they'd like to add in. We bring on visiting fellows to support particular projects. So yeah, we want to act as like an intellectual and sort of cultural hub to a certain extent inside DC on Bitcoin and these larger questions. So yeah, we're going to be opening up a full-time office in partnership with PubKey downtown over the course of the summer. And that'll be like one of these third spaces to host these sorts of events. And we'd love, once we're full operating capability, to have folks that are in DC, just like a spot to hang out, grab a burger, and hang with the BPI crew. So yeah, so you can go to btcpolicy.org to check us out. And you can email me, pines@btcpolicy.org, if you have any questions or you want to get involved. And
It's like StarCraft in the subject. I wouldn't shortchange yourself too much in the sense of like you Bitcoin's gonna get the SBR. It's just a matter of when, not if, and nobody else is gonna get that from the crypto side. And then also appreciate how much fun you guys are having. You see it on Twitter, and it reminds me a lot of what we're building here in the sense that like as long as you're on the right side of history and also you have the passion and energy, it doesn't matter how much capital somebody else has because you just are able to counterposition. And that's kind of like how I think about us building this business. And it ties into the custody stuff where we're, talking with you guys on trying to help on just some of the multi-institution aspects of like, what does an SBR actually look like? And this was from building self-custody solutions for hardcore Bitcoiners and realizing like, holy crap, trillions of dollars are going to come into this space and it's all going to go to Coinbase or proxy Coinbases. And that's how gold failed. So we naturally need to leverage Bitcoin's properties from a decentralized perspective. And I think that's now starting to become mainstream where like bit bonds or any kind of sovereign exposure to the asset it can't be held on plastic devices and desk drawers. And it's also can't sit at Coinbase because we know what happens when, hard money centralizes. So you can just do things just like you wrote a paper and now Trump is doing stuff.
Yeah, exactly. Right. Like never underestimate the power of memes. Right. And, an organization starts as a meme and it becomes a real political force and you can just do things. So I would just go do things.
I love the inspirational end to the show. Well, Matt, appreciate you joining. For those listening, check out btcpolicy.org and maybe join the event in June. Thanks again, Matt.
Thanks, Matt. This was awesome. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.